Good morning, friends. This is time for the trade plan for 17th of June 2020. Now, yesterday, the market had all kinds of volatility, and yesterday is the kind of bad luck that traders don't want to have. We opened about 200 points higher, and then all of a sudden, this China news came and people who bought after the dip at the open because the plan was 99.50, 99.70. You know, they got their stops hit. I still don't think there was anything wrong in that trade, but if you get that sort of news, chances are the market will be volatile, and the only thing you can do is use proper stops. In my view, I don't think the short trade was on yesterday. What could have been done was that 9720, which was the low of the day before, out there the market found support again, and that is now kind of getting defined as the downside, immediate downside for this market. Overnight, US markets have gone up but have closed below the session highs by about 300 points. At a certain point, it was up 800 points and finally closed up only 500. The SGX right now is down about, excuse me, 45 odd points. So there seems to be some impact of, uh, the Sino-India standoff, and Asia is kind of, flat to negative. Now, what do we do here? There should not be any doubt that the global trend is up. If the global trend is up, our local problems, short of a war, is likely to provide you dips to enter. And what could be the extent of that dip? It could be 97.20. Okay. Similarly, on the bank nifty, I think yesterday's low of about 19,500, now becomes a line in the sand. The nifty range for the day, roughly is about 99.70 on the upside and 97.50 on the downside, a 200 point style range. But given that global markets are still up, you should be looking for those sorts of dips. And why dips will happen? They can happen because there is some fresh news from border. They can happen because the Supreme Court judgments are adverse. Even if Supreme Court judgments are adverse, the market will find it difficult to break 97.20. So that basically is my call, that for the moment you should be buying into declines which happen for any reason towards 97.20, 97.50. Now let's look at the Nifty chart that we have. Okay. So this is the chart that we have here. The bar from yesterday, you can't call it bearish, but at the same time, you can say it is mildly bullish. Both yesterday and day before, the bodies are red, but the wicks are fairly large. So this gives you an idea of what kind of market we could be dealing with. A choppy but an upside biased market. So both these, lows of the wicks, they define the area where you should be buying. Now let's look at the 5-minute chart here. Okay. Now this 5-minute chart, this is the high, which is about 10,044. This is the low, which is about 97.20. So I am considering this area as an outside sort of zone. So my range basically starts from this area, which is about 99.70, 99.80, thereabouts. And on the downside, so if we get down here, I think this is where you try to buy into it. The other thing is that it needs to be remembered that this could be a weak rally. Why? because of all these extra issues we have on, Supreme Court, etc., the market will give you several dips. So the point being that each time we get towards 19,500 on uh, Bank Nifty, we buy. Each time we get to about 21,300 to 500 thereabouts, we try to sell. You can use this as a this range is about 20,500 to about 19,500 to 600 thereabouts. Overall, I still think that what I described to you yesterday, which is basically that the market is moving in swings, that view continues. So as you can see here, that some kind of a choppy upswing is in place. So the idea should be to keep trying to go long whenever you get that sort of opportunity, the levels and all you have to wait for some sort of dip. Now let me give you the Camarilla levels. Nifty levels on Camarilla are 97.60 to 98.28. Resistance is 99.66 to 10,035. Similarly, Bank Nifty Camarilla levels are support zone at 19,594 to 19,924, and resistance comes in at 20,584 to 20,914. Let's look at the S&P chart. As you can see, the S&P 500 has resumed its upswing. Okay, so the plan is, as we speak, the Nifty is now gone down 63 points on the SGX. So the clear plan is that at lows you buy and then you wait for the swing to reassert itself. Okay, so Asia is likely to open weak today. Plus, we have our own problems. But since the global trend is up, we should be looking to buy at lower levels. We have some 9,200 puts with us, which if we get close to the 9,700, 9,720 zone, or rather 9,720, 9,750 type of zone, there we would like to exit them and then look for the buy or decline opportunity. As far as stocks are concerned, my view is that the Supreme Court is not likely to come out with an unfavorable judgment. So if you get some sort of large decline on Bank Nifty early morning in anticipation of the judgment, or even post the judgment, there should be pause for buying into financial stocks at lower levels. I think the market has priced in a judgment which says that you cannot take interest on interest, but you know you can take the interest on EMI. Anything worse than that will lead to a dip, and anything better than that, which the chances of which are low, could lead to a bit of rally if the judgment is that interest on interest need not be charged. That I think is pretty much in the price. Okay. My advice would be to use this volatility to build positions in strong stocks like Reliance or private banks, or housing finance companies, maybe even metals. So if you buy near 9700, 9720, that basically means that if and when the upswing starts, and we could lag, but if global markets are going to remain in an upswing, so will we. So that sort of view should be taken whenever the market declines. Even on an intraday basis, the congestions we look for should be looked for at the lower boundary, because from there the sort of risk reward you will get is much better. Try to avoid trading the market in a breakout fashion. So if you start to have a congestion at the higher end of the range, that is avoidable. Try to look for a congestion to be formed at the higher end of the range. Basically, like I showed you, this is the lower end of this range. So you should be dealing with the market here. Okay. Try to avoid congestions which are made here, because the market tendencies are not really a breakout market. That should be it for right now. Take care, trade well, and please consult your financial advisor.